So assuming you are auditing, your audit firm is called A&B Associates. That is your audit firm. And you're auditing this company, which we call it XYZ Limited. So the first thing we ask ourselves is, what are the factors to consider before fixing the audit fee? Factors to consider before fixing audit fees. This is something you should be able to know because you have perhaps done a work somewhere and you have been paid either hourly, or you have been paid maybe on time late, or you have been paid on piece rate. And I know in previous classes, maybe for example in management account, there is what we call cost accounting for labor, and there you say that whenever you are paying someone, you can pay someone using what? Hourly rate, or time taken. The same case applies to auditor. An auditor is supposed to be paid per the hours taken. So if we worked for many hours, we give him more rate. So when you are negotiating the fee, as an auditor, the first thing that you're supposed to consider is how many hours do you think you're going to spend within the client. If that is not going to give maybe an idea, a rough idea of how much you're supposed to be charging, then you can look on the nature of the work. This is like what we discuss in maybe management accounting called the piecework method. So we say nature of work, or you can also go ahead and call it scope of work. So usually, even if you are doing plowing, when you say, I'm plowing this piece of land, that land will depend on the size, on how much you're going to charge. So the same case applies here. The amount of work that you're going to be doing can also determine how much you're going to be fixing as the audit fee. But have you ever realized that sometimes the audit risk that is involved, or the risk that is involved within a particular work, will make someone charge a higher fee? Because, you know, the risk is likely to maybe to put you to so much liability. So you charge a higher audit fee relating to that particular work. So that is a factor to consider when fixing the audit fee. The other factor to consider is the nature of the audit firm, nature of audit firm. There are certain audit firms, we call them the big audit firms. A good example will be Deloitte audit firm. Another one will be KPMG audit firm. Or another one will be something like PwC audit firm. This one, because of the nature of the size of those audit firms, they charge a premium. And so because they charge a premium, it happens that for them, they charge a higher fee compared to any other particular client. You can also charge an audit fee based on what we refer to as market rate. So you may decide that you're going to be charging perhaps 5,000 shillings per hour, but the market is maybe 8,000 shillings per hour. Or maybe you're charging 5,000 and the market is 2,000. So there is no way you're going to get clients. And if you're using the client, maybe you're using the fee to get the client, then market rate should guide you. Market rate is the prevailing market rate for the fee that is charged by other auditors. That should also guide you in fixing the what? The audit fee. You can also go ahead and use what we refer to as the nature of the contract. Nature of contract. Sometimes you can decide that you're going to do a fixed contract. I'm going to charge this client this fixed amount of money. Or you can say, I'm going to charge this client this variable amount of money. So you can decide whether you're going to use a contract that is fixed or whether you're going to use a contract that is variable, meaning that the rate is going to be varying maybe with the what? With the nature of the work, or maybe with other factors that you have considered in that particular case. So this is what we call factors to consider when fixing the audit fee, or before fixing the audit fee, or you can say factors influencing the audit fee. Factors influencing the audit fee. The factors that are going to guide you before you go ahead and fix the audit fee. However, these things have exceptions. There is what we call exceptions, and which you need to note concerning the fixing of the audit fee. That is what I want to go ahead and explain. When you're fixing the audit fee, the rules are that you should not go ahead and fix the lowest audit fee in the market. So if you fix a lower audit fee, this is what we call exceptions. If you fix a lower than the market rate is here, you fix a lower audit fee so that you can get the client. That is called lowballing. So I'm going to put the word here, lowballing. some people refer to lowballing as tendering low for audit services. Tendering low for audit services. You can say tendering low for audit services, or you can just go ahead and say it means charging the lowest than the market rate. We say charging lowest than market rate. So if you are an auditor and you say, I'm going to charge 2,000 shillings when the others are charging 10,000 shillings per hour, then you're charging low than any other particular person. And so we call that lowballing. Lowballing is unethical because it is not part of what? Factors to consider. You are not supposed to charge low so that you can undercut other audit firms. Your work is to charge according to the hours worked, according to the nature of the work, according to the risk involved. So do not charge low compared maybe to the market rate. If you do that, that will create, remember the rate, we said there is a rate called self-interest rate. That will create a self-interest rate. The self-interest rate created by that particular charging of the lowest audit fee cannot be reduced to a low level. So you're not supposed to continue charging a lower fee than any other particular person, because in that scenario we say you are pursuing your own interest. In other cases we say when you charge low, other people will start thinking that the work that you're providing is shoddy, and apart from that one is low quality. So we say it affects the quality of the audit. The quality of the audit work. So because most people who will be looking at that maybe value will say this value does not maybe concur or does not agree with maybe the value in the market rate. And so this guy may be performing the audit work that is should, or substandard for that matter. It also affects auditors' independence. Affects auditors' independence. That is what? Lowballing. Because in most cases you are going to be influenced. If you want to get money, you go ahead maybe and give a certain type of an opinion. So lowballing means charging lowest than the market rate as an auditor, and it creates a rate called self-interest rate. It also affects the quality of the audit work and can affect the auditor's independence. That is one of the factors you need to consider whenever you are charging the fee, and you should not comply with those particular rules or requirements of lowballing. Then there is also a situation whereby, apart from charging the lowest in the market rate, you can find an auditor charging a predetermined fee. He say, let's determine the fee in advance, and that fee is going to be based on a particular percentage. That is called contingency. Contingency fee. A contingency fee, we can say it is a predetermined fee. Predetermined fee charged by an auditor, charged on the basis of a performance or a particular what? A particular benchmark, or what we refer to as bottom line. Bottom line. So if you hear perhaps today you will be paid 5% of profit before tax, or 5% of turnover, or you're going to be paid maybe something of that nature, or we can just define it and say when an auditor is charging a percentage of the performance. That is what we call contingent fee. You're not supposed to charge a percentage of the performance of the company, because now that will go ahead and create a type of a rate called self-interest. And apart from a self-interest, also creating an advocacy rate. It creates two types of rate. If you remember the first lesson in this topic, we discussed about the rates, and we discussed self-interest and advocacy rate. Those are the rates that are created by what? Contingency fee. Now you know two factors. One, lowballing, charging the lowest fee in the market rate. Then the market rate, contingency fee, charging a percentage of the performance, or charging a predetermined fee based on the performance of the company, or a bottom line. For example, charging 5% of the total sales. That is a contingent liability, and it creates self-interest and advocacy threat to an auditor. Having covered that particular part, there is another term that we are going to define in fees charging or audit fees. because we are still discussing audit fees, we need to know something called undue dependence. Undue dependence. The undue dependence term means that the auditor is deriving a large portion of his income from a single client. And so we can say it arises when an auditor derives a large portion of his fees from a single client. To be specific here, we say when an auditor is charging more than 15% of gross income from a single client. Auditor charging over 15% of his gross income from a single client, Let me repeat that one. If you are an auditor and you're deriving so much money from a client that is depending so much on a client, and that is referred to as undue dependence. So undue dependence arises when an auditor is charging a large amount of money, and that large amount of money is greater than what? 15% of your total income that you have received in a particular year. So if you want to know maybe how to compute the undue dependence, you just go pick the fee that the auditor is getting, put over the total fee, and then multiply this one by how much? By 100. This one is going to give you a percentage. If you find that the percentage is 17%, then automatically you know it is greater than what? 15%, and then you can go ahead and withdraw from that engagement, because undue dependence creates self-interest rate, and that can ruin the auditor's opinion and objectivity. Now, that is what we call undue dependence. We call maybe what we refer to as factors to consider when fixing the audit fee. One more item perhaps, which I'm going to discuss here very fast, is outstanding or overdue audit fees. Overdue audit fees is a fee that has not yet been paid to the auditor. We call it overdue fees. This one is outstanding fee. Outstanding audit fees. In most cases, we say whenever the fee is outstanding for an auditor, it creates debtor-creditor relationship, which means now the auditor will have now to wait until he's paid. And so the client becomes a creditor, or the clients become a debtor while the auditor becomes a creditor. In the real sense, it is like an auditor is providing what? Loans. To who? To the clients. So that is like loans to the client. If you go back to the previous lessons, you realize that we said loans to and from the client create self-interest rate. And therefore, if you're going to be finding yourself that you have not been paid overdue fees, you have not been paid fees for quite a long sum of time, then it means that the client is going to compromise you before he goes ahead and give you the money. So assuming maybe he's supposed to pay you 2 million per year, but now he's paying you maybe something like 1 million, and he's telling you that 1 million you have to wait, and then you wait until maybe you can wait for more. This one means now you have created a debtor-creditor relationship, and therefore the client can control you very easily because of the self-interest so created. So that is overdue fees. And so those are matters that you need to consider relating to fees. Remember, audit fees means maybe the amount charged by the auditor together with the issues relating to any expenses incurred on behalf of the client by the auditor. Audit fees of a company of an auditor is fixed either based on hours worked, nature of work done, audit risk, nature of audit firm, market rate, together with maybe nature of the contract. Again, whenever you are charging audit fee, do not charge the lowest than the market rate. That is called what? Low borrowing. Again, when you are charging the audit fee, do not charge up as a percentage of the performance of the company. That is called what? Contingency fee. When you are charging audit fee, make sure that you're not earning over 15% of your gross income from a single client, because that is called what? Undue dependence. And do not allow any overdue fee not to remain unpaid for quite some time. Inform the shareholders, inform the directors, inform the audit committees, and they're going to get that money for you so that you can retain your objectivity.